quadruple witching. We've got big volume right at the open already, 350 million shares on the floor of the New York Stock Exchange. What we don't have is volatility despite the worries about Greece. I just want to show you the VIX, which is only slightly elevated today, essentially sitting not far from the lows of the year. It's been quite amazing, the levels of complacency given what's going on over in Europe, because I think the Greek situation is quite serious. Interest rate sensitive stocks, this is rather curious today. Yields are down in bonds, and yet normally on a day like this, interest rate sensitive names would be on the upside. They're a little bit weaker, so REITs, telecom stocks, utilities are all market downside leaders today. Meantime, in Europe, again, that sense of complacency because the German market's generally holding up pretty well. France is up, Spain has been up, even the Greek market is on the upside. I keep getting asked why the markets are not worried about Greece and what's going on. I do not share that lack of worry, but I can tell you the reasons that I keep getting told about it. There's the fatigue after 5 years of crisis. Everybody's over it. There's complacency. Most feel that a deal will be made at the last minute, even if it's just kick the can. There's no contagion so far. Traders believe the ECB when they said they'll do whatever it takes to keep the rest of the euro together. And there's the containability argument. If Greece leaves the euro, a lot of people have convinced themselves the damage could be contained. They've pointed to the peripheral bond yields. Spain's only 2.2% or so on its 10-year yield, so they believe it's containable. I do not share this complacency, but the market certainly has spoken. Meantime, did you see what happened overnight in China? China's domestic stock market is finally slowing down. Shanghai was down 6%. Shenzhen, I call it sort of the NASDAQ of China, a lot of fast, nimble tech companies on the Shenzhen down 6%. Despite that, the Shenzhen index is still up 94% for the year. And that's an indication of what's going on. Look at that chart for the last 6 months or so. The market there is dominated by young investors, mom and pop households. 4 million brokerage accounts in March alone. There have been millions of new brokerage accounts opened in China in the last few months, and that's a bit of a problem. That's good news, and it's a problem because as the markets run up, they stay in, but they get out very fast. And there's signs of a little bit of concern over there. I think a correction is certainly in order. And by the way, there was a flood of new IPOs over there this week, and I'm sure that's also putting pressure on the market. Meantime, the wellness fad keeps going. We talked endlessly about Fitbit yesterday. MindBody is going public today. That's in the wellness industry. They provide software and help for yoga centers, healthcare centers to manage their businesses. $14, that was the middle of the price talk. And the restaurant businesses are hot. We talked about Wingstop doing well last week, and Bojangles has done well. Fogo de Chao is going public, and it priced at $20. 16 to 18 was the price talk, but last night priced at $20. Another big string of victories for those restaurants. Speaking of the IPOs, I've been saying all year, I'm waiting for it to heat up, and it just keeps going on. Finally, we're seeing some action. Next week, 14 IPOs, more than $2 billion will be floated. There will be 3 energy companies, 3 cloud-based companies, 4 healthcare. I can't get into all of them right now. We'll do it on Monday, but TransUnion is going to be the big one. Of course, that's the big credit company that's out there, a credit reporting company, and that will float more than $600 million. So quite a week we're going to see next week. Right now, the Dow down 40 points.